Hi everyone, Buyer's Agent Jay Pace here for Providence Property Group, giving you an update for the month that was February and March. So I have actually been flat out and busy, and that's why I didn't do a video last month. I'm so sorry. It was really nice because people started reaching out and wanted to see if everything was okay. So that was really lovely. For those of you who are new to the channel, we're a national buyers agency with offices in Sydney, Melbourne, Brisbane, Adelaide and Perth. We believe there's always opportunity somewhere to buy something, and we help you to be a player and not a spectator in your wealth journey, focusing on quality properties over quantity. Operating through 3 decades now. We're getting close. It's so amazing to 20 years. So we started in 2006. Our experience will ensure no sleepless nights worrying about property markets, because on this channel, we talk about all things property, but most importantly, I read the news and separate the facts from the fiction so you don't have to. Anyway, let's kind of jump straight in. We are honoured as Australia's small business finalist for the 2nd year in a row. And the week after that, we actually were announced as a finalist here in New South Wales for the local business awards for the city suburbs. So celebration for us all. We're very excited. Thank you so much for everyone that voted for us. It truly is an honour. Thank you. Linton and I, one of my business partners, we travelled. I'll make my head a little bit smaller because it's big enough already as it is. Linton and I travelled to Perth during late February, early March, and we were there for about a week, and we went and checked out what was going on the ground there. We've been buying properties for so long there, and it's been about 6 years since I've personally been to Perth myself. Everything's changed. It's so amazing. Wanted to see what was going on the ground, but also we've got a new buyer's agent that we brought into our growing team there. We've got 2 teams. So then we took that team out for drinks, and there's a few of us. A couple of the other ones were actually at the bar at the time. But anyway, it was just really nice to see everybody and meet the new buyer's agent. We hosted an event for some of our business partners, providing an update on the market, and that was really well received. And thank you so much for all those who came. I was invited onto the Australian Property Podcast with award-winning broker and author Aaron Christie David to discuss all things property. I will leave a link in the video in the description of this video. It was a blast. He's such a great guy, very smart, and we got to discuss everything. There were a lot of auctions. We were at auctions, rain, hail, or shine. We were there. So it was a pretty full-on time as well. Now, this is data from March 2019, so 5 years ago. CoreLogic actually released this image, and I saved it. I saved all of their stuff, and I remember people saying things during this time like, oh my Lord, everything is so expensive, the market's definitely going to crash, there's no way, it can really get any higher than this, Armageddon's coming. And then I thought, do I remember that wrong or do I remember that correctly? So then what I did is I jumped online and I just looked at some of the headlines from 2019, and you can see some here like Australia to see the world's worst 2019 price fall. This was in this big report. Australian house prices falling the fastest rate in a decade. Australian house price crash accelerates into 2019. That was in January 2019. Will Australian property prices continue to fall? House prices in the sharpest drop since the global financial crisis, and will continue to trend lower. That was all in 2019, mind you. Now, taking that same image, but now I've updated the data, you can see combined capitals actually increased from 2019 March to 2024 March by an average of 42%. The reason I highlight this is I have conversations, and this is no way a dig at anybody. I have conversations at least 2 or 3 times a week with people that I've been speaking to for sometimes years, who enjoy the videos, enjoy having a chat with me, like meeting up, really nice people. But for some reason they can't pull the trigger. And there's always something, oh, but this news said this and this person said that, and I was at a barbecue the other day. These are professionals that write these reports, right? That write these articles, and they're wrong. So who are you listening to? So I think it's just really important. I mean, look at the data. Median dwelling value for Sydney increased up to $1.140 million today, which is 45% above what it was in March 2019. Melbourne, currently up 24%. Brisbane, up 67%. Adelaide, 71%. Perth, 60%. Canberra, 41%. Hobart, 42%. Darwin, 24%. I mean, it's just quite amazing. Also, CoreLogic recently, they must have had the same idea as me. They put out recent data, but they sent it, and you can see here, the onset of COVID was calculated from March 2020. So they've gone from the onset of COVID, March 2020 to March 2024. So 4 years, okay? And you can pause this video when you get a chance, but basically it shows the percentage increase, the dollar amount, the change from the peak, and you can see Brisbane, Adelaide, Perth are all at their peak. And I keep getting people saying to me, has the market peaked? These markets peak and push past the peak. Peak and push past the peak again. Sydney is starting to slow down, and I'll show you some data on that in a moment. But across the combined capitals, 48.7% capital growth. It's nearly 50% increase, over $200,000, and at its peak. And I'll show you capital cities that are still going past that peak. Our national home loan debt levels are still actually quite attractive, with only 21% debt to the current value of our market. So our market's currently worth $10.3 trillion. I very rarely get to use the word trillion. It rolls off the tongue quite nicely. $10.3 trillion. The debt levels that we have in Australia are the equivalent of you owing maybe about $200,000 on $1 million mortgage, $1 million home. Okay, so it's actually quite attractive. So let's look at the hedonic home value index. This is one of my Bibles. I look at it every single month when it comes out, and I basically read it every single day. Now, if we have a look here, you can see the monthly change that Perth was the best performer last month at 1.9%. Then second place was Adelaide at 1.4%, and then Brisbane at 1.1%. And if you have been watching my videos for the past couple of years now, you will remember in 2021, I said that over the next 5 years, Brisbane, Adelaide, and Perth are going to be the best consistent performers in our market. And it looks like it is correct, okay? Then if we look at the annual column there, so the annual change in performance, you'll see that Perth, as I was saying about a year ago, Perth is the best performer, 19.8% up. The total returns column, and this confuses people sometimes, the total returns column to the right is annual growth plus rental yield, gives you a total number. So 19.8% plus the rental yield gives us 25.4% return on our money at $703,000 as the median dwelling value, right? And median dwelling value means unit, house, townhouse combined. And then later on the report actually breaks down houses versus units, etc. So it's actually quite a good report, and it's free. So if you want it, send me a message. I'm happy to send it through to you. You can see, as I said, Perth first place, Brisbane second place, 15.9%, and Adelaide third place at 13.3%. That's in the percentage increases. If we look at the dollar terms, actually Sydney is second place there, not third, not fourth place. Let's keep looking. If you remember these numbers from February's video, when I look at the 12-month performance, okay? And like I just said in this previous slide, the 12-month is an annual performance, but it's rolling. So this is going to be March to March, whereas the January data would have been December to December, basically, okay? So let's look at it right now from the February video that I did, which was January to January, okay? We saw that Sydney finished the year $125,000 up, or $2,400 increase per week. We saw Brisbane at second place at $103,000 up, or $2,000 per week. Perth third place at $100,000 or $1,900 per week. Adelaide at $67,000 increase, or $1,300 per week. And Melbourne, the worst performer in Australia, $27,000 increase at $500 per week. But now let's break these numbers down more and follow this ever-changing annual performance amount. So what I did is I took both reports from January, which is the December data, and from April, which is the March data, March to March, December to December, and I just wanted to see what the differences were there. And one of the real interesting things that I can see is with Sydney, I took the annual amount, 11.1%, times by the median dwelling value, gave me $125,243 increase. Then I divided that by 52 weeks in the year to see what the weekly performance was over those 12 months, December to December, right? End of December to end of December. $2,408. Then I recently updated it for this new video, and I came across it and I thought, okay, I'm really curious with the speed of the market, what's happening. And Sydney's actually slowing down. And you can see it's only 9.6 now instead of 11.1, but I wanted to see, well, what's that in dollar terms? So I took that number again, annualized it, and then divided it by 52 weeks. And you can see the market slowed down from $2,408 per week to now $2,103 per week. So it is decelerating in speed, okay, which is interesting. Now let's look at Perth, which I've been talking about for quite some time. Perth has some data there where we can see $100,000 for the year increase at $1,900 per week. And now we can see an acceleration. So that was December to December, but now March to March, a couple months later, it's accelerated from $1,900 a week to nearly $2,700 per week. So someone's put their foot on the accelerator in Perth and the market is pushing hard. So my new numbers currently today show that Perth is up $145,000 from March to March, which is $2,700 per week, give or take. Brisbane is at $130,000 increase, or $2,500 per week. Sydney is at $109,000 increase, or $2,100 per week. Adelaide at $98,000 for the year, or $1,900 per week. And last, Melbourne, $25,000 or $500 per week. Nothing's really changed there. So really interesting to understand these numbers, because when I get someone who's come to me that's pre-approved, they've got 3 months of pre-approval, 90 days, 12 Saturdays. They're not going to do all 12 in a row. Let's say they do half. They do 6 of those 12 in a row. And then they see an average of 2 properties per weekend. They've seen 12 properties in 3 months. It's not a lot. More than 50% of those properties will not be ideal for them in any way. They won't want to bid on them. They won't want to make an offer, or they're just above their price guide. So really interesting to see how time affects people. Property prices predicted to boom by 30%. Now this is really interesting because more data is starting to come out, and more the change, I think, in the song that people have been singing about, oh, you'd never buy in Perth. Perth never makes money. It's a mine town. It's boom or bust. Sydney median house price to hit $2 million. Perth to hit 1 million by 2027. Now that's from an Oxford economics report, and I'm going to show you the table in the next slide. Perth propelled into property powerhouse. Oh, someone's a fan of alliteration. As WA's economic engine roars. Perth property boom shows no sign of slowing as experts predict thousands to join the $1 million property club. Again, lots of just the change in the rhetoric there, the change in the singing from the hymn book that we're seeing from the media is always interesting when you can catch it. Now here's the actual table from Oxford Economics that I was able to dig up. So this is what they believe property prices are going to be in that middle column there, based on the $1 million mark by June 2027. So over the next 3 years. So let's just you can pause this and have a look in your own time. But the ones I want to point out is Sydney, they believe, is going to hit nearly $2 million bucks, basically 1.93 mil. Melbourne, 1.28, and Melbourne's on my radar for a couple years' time. I'm going to buy a few more investment properties probably in Brisbane and Perth for myself over the next couple years, but I'm just waiting to jump into Melbourne. I think Melbourne's going to be a really good runner in the next 3 to 5 years' time. It's going to go off. Brisbane, $1.21 million. Adelaide, almost $1 million bucks. Perth overtaking that Adelaide position at $1.05 million. So quite interesting just to see what we think the market's going to do there. And I agree with Oxford Economics. Now, let's talk a bit more about migration. And I do talk about this quite a bit. I'm a very proud son of a migrant parent, and my parents' parents are all migrants. And I think migration made our country great very long time ago. But now I think we're letting in a lot of people, and I don't know if we're going to be able to cope based on the numbers I'm about to go through with you now. Over 750,000 new people will have entered our country by the end of this financial year. The nation's population is forecast to grow by 7.4 million people by 2041, requiring an additional 2 million dwellings across our 4 major capital cities. And I've got the numbers I'll show you in a moment. Australia brought in a record 518,000 net overseas migrants last financial year. And in January this year, we welcomed over 55,000 migrants. That's more than double what we welcomed in January 2023. That's the highest January intake in Australian history. And you can see this chart shows Australian net overseas migration and just obviously how it took off after COVID and after we had vaccines. Recently, demographersID.com.au, so you can jump onto the website, estimated that Australia's population will increase by 9.2 million people by 2046. And the vast majority, 67% of that growth, will reside in 4 of our capital cities. And Adelaide is not one of them. It's Sydney, Melbourne, Brisbane, Perth. Okay? And this is why when lots of people ask me about Adelaide, I say, well, it's usually not even on the radar for me because of the size of the economy. It just doesn't make as much sense as Perth. This chart shows projected population growth for all states and territories between 2022 and 2071. Now, I know that's a long time away. A lot of us are going to be very old people by then. But at the end of the day, it's just really interesting to see that projected population growth. And it is just right up in the air, isn't it? This is where the numbers really start to scare me. This chart shows dwelling approvals for monthly house versus unit approvals. So houses are in black, units are in orange. And you can see they are well below their 10-year decade averages, which is that dotted line you can see across the line there. During 2022-2023 financial year, Australia saw an increase of only 169,500 new dwellings. So this number fell significantly below what is required to house the record 626,000 growth of our population in Australia during that time. The current pace of construction is lagging by approximately 75,000 dwellings compared to the annual need of 240,000 new dwellings. And while approvals have trended a little higher through 2023, monthly approvals remain well below those previous decade averages, as you can see there. So my question is always, how the hell, excuse my language, is the Albanese government going to build 1.2 million new homes within 5 years of their time frame, which is what they promised? And the answer is they can't, okay? And this is not political. I don't care who's in office. It's just not something that anyone can promise, but it wins votes because there's a lot of people out there that are struggling and worried about housing affordability. But it's something they can't answer. Let's look at rental vacancy rates for those people that can't afford a house and must be renting. Capital city rental vacancy rates are 1%, and that's driving an increase in rents, which may attract more investors to the property market. And we have historically low vacancy rates and very rapidly rising rents. So we're seeing rental vacancies drop, now 66% below the 10-year average. So new dwelling approvals are trending lower. So the outlook for additional rental supply remains very poor. And I know I read something the other day where they said that the current amount of migration is outpacing construction of new dwellings 4-1. And that is a scary number. So anyone that's going, oh, the market's going to crash, market's going to crash, I can't see how. I can see how people can't afford it anymore in Australia, but then you've got people coming from other countries that think we're still very cheap. That's the big thing. If you are a country where you are importing people from all over the world in other countries, our country, when it comes to the property prices, look cheap. And if you don't agree with me, jump online and look at what the prices are in Hong Kong, Singapore, UK, Europe. Like, just go and look, check it out. So the Australian rental property vacancy rates for the cities across the nation, okay? This chart shows rental property vacancy rates in selected cities in Australia for February. And it shows here that Perth actually has the lowest vacancy rate. So even though the average is about 1%, Perth is at 0.4%, which also plays into some of the data that we're seeing for Perth as well. Now, you can see for rental yields, we've actually bumped up a little bit. We were at 3.5% last month for the gross rental yields for dwellings. We're at 3.6 now. So because probably Sydney's come down a little bit and because it has the highest price point in Australia, I think that's probably a reason why we saw a little bit of a change there. And obviously as well, because the price points are significantly increasing in some of the other states, that's another reason you're going to see price points change. Sydney is currently at 3.1%. It was at 3%. I remember it getting to as low as 2.9%. But 3% at the moment. So where I am in Sydney, not the most attractive place to buy an investment property because of the long-term holding costs. We can see Brisbane, Adelaide and Perth still very attractive, 3.9 and 4.6% rental yields. As a result of the lowest vacancy rates, as a result of the second lowest property price, and obviously also as a result of the highest median household income in Australia, Perth rents have increased the highest in Australia for both houses and for units for the last year. Now let's quickly talk about interest rates. I'm so sick of them, but I'll be real quick, I promise. So last month, the inaugural meeting of RBA's new schedule were held, and changes were implemented to allow the Reserve Bank Board more time between meetings for comprehensive analysis. Thank the Lord. It just seems like someone slapped someone across the head and said, why are you changing interest rates every single month? What are you doing? You need to give, the RBA needs to give Australians time when interest rates change to see how that's going to affect the market. You can't do it on a 31 day rolling basis. It's the dumbest thing ever. And people have been screaming this from the hilltops for a long time. And it seems like they kind of have started listening. So they want to do more comprehensive analysis. Well, duh, they should have been doing comprehensive analysis in the first place. It's just very frustrating. So they're now going to look at relevant data and advice for alongside bolstering engagement with the wider public. And that's great because the public have been screaming and they have not been listening. During the meeting, the RBA board opted to maintain the cash rate at 4.35%. So it hasn't changed now for a couple of months. The next update is not until May 7th. So don't stress, wait till May 7th. We'll see what these geniuses, overpaid geniuses, have to say. I would like to now talk about our recent purchases. And some of these are actually from the end of last year, but they were so good I didn't want to ignore them. But my problem is the market's moving so quickly, some of the prices are becoming irrelevant when I'm telling people what we bought them for because they've moved so much. But I still want to show you what we've been buying and why. I'm particularly proud of this purchase, and it's because the lowest priced properties are always the most difficult to obtain because you need to find quality in a property at a lower end of the market. So currently, the median house price in Perth is over $720,000, and the median unit price is just under $500,000. Now, this client had a budget of $400K. Okay, and Providence has a flat fee for any properties purchased below $500,000. So for us, getting a client at $400K or getting a client at $450, $480, $490, $499, $500, we're going to charge them the exact same amount. So we're not pushing people to spend more because it helps us. It's because it's definitely going to help you. So this client had a $400K budget. The client's brief called for something young, with low maintenance and some type of a land component, no units, okay? They really didn't want strata either. My team, God bless them, such a great job. We were able to secure this property for $408,000. I like the area so much that I actually bought a house in the same suburb for my super fund last month, okay? And as always, I'll do a video on it just like I did it for the last one that I bought in November 2022. I'll do a video on this one, but I've just settled, so give me some time. Now, this one, the distance from the CBD is about 25 kilometers north, $408,000 purchase price. The rental estimate is $500 per week. Now, it's an estimate, but I know we're getting this because we actually did a leaseback agreement to the current tenant that's living in there, the owner-occupier. So we're getting 6.3%. Amazing. Why do we love this purchase? Top location, low maintenance, above average rental yield, rear access, okay? I love rear access. The neighboring suburb, the median price point is 15% higher than the capital city average. And like I said before, just over $700,000. So it's 15% higher than that. Properties are actually selling in that next door suburb for over $1 million, which is why, again, I bought in this suburb where I got my clients to buy this property as well. There's exposure to multi-million-dollar infrastructure projects and access to cafes and public transport. It's a great purchase. Now, let's look at the other end of the spectrum. This is a 1975 three-bedroom unit that we purchased for a client at auction. This block has 40 units. It's on Osborne Road in Manly, okay? And the median price for a three-bedroom unit sells for $2,852,500. 3 bedrooms, unit, 1975. Okay? Now, I mean, look at that. Is that not spectacular? Look at that. Now, to be honest, the property that we purchased in that building does not have that view. Okay, it doesn't look straight out to the ocean. It's on the other side. It is still one of the best locations in Manly. Last June, a unit in this building with an identical floor plan sold for $3 million. And it was not renovated. The week of this auction, 2 identical configured apartments in the building sold for 3.1 and $3.5 million. They did have ocean views, but again, they were original condition and not renovated. The one we purchased for our client is fully renovated, absolutely gorgeous, still has a nice outlook, but you're just not looking directly at the ocean. So 40 people were in attendance with only 3 bidders. The floor plan is actually quite lovely. We bought this property, like I said up there, $2,512,500. Now let me quickly tell you the story. As a buyer's agent, we are privy to very candid discussions with the agent who's selling the property, because we're both we work in the same industry. They know that we understand the market. So the discussions are usually quite frank and honest. We knew that the property needed to be sold because the agent told us that the sellers had sold something in another state. They were looking to buy their dream home. They needed to sell this. They already found a property they liked. They wanted to make an offer. They needed to sell. Okay. So time was not on their side. The sellers had sold those properties. They needed the money. The property passed in, actually, and the reserve was set at $2.65 million, still lower than those other $3.1 and $3.5 million units on the other side of this block. $2.65 million passed in. And the property then went to negotiations for over an hour. Linton Stevenson was the buyer's agent on this one. He did such a great job. And he sat down for an hour, cool as a cucumber, chatting with the agent and the sellers about the price point. Linton was so good because the vendors were not happy with the purchase price. He negotiated that the vendor's agent, the selling agent who was representing the seller, he told them to take some commission off the cost they were going to charge the seller. And they said yes. He said, you take 12.5 grand off yours, because Linton's whole philosophy is, if I'm going to give something, I've got to get something. If I'm going to give you some more money, take some money off the commission for these guys, make it look good. So all of a sudden, the selling party started to like Linton as the buyer's agent because he was negotiating for them as well. It just put us in a great position. So we secured the property, $2,512,500, and our buyer from overseas was ecstatically happy, because we know what this property is probably worth, and it's more than that. Here's another one. Last year we purchased this beautiful 3-bedroom townhouse with a study and 2 car spaces, so it's quite large. I love this property because it was street facing. It feels like a house with beautifully presented facade, okay? It's in a great location. I'm kind of giving it away. It's in Coorparoo, okay, which is about 5 kilometers from Brisbane CBD. Location's great. In a beautifully wide street, you can see there, really quiet. I think this is great. And I think the trend's becoming more and more towards these type of properties because houses are becoming too expensive. Units are becoming, for some people, too small with growing families. So townhouses have that natural progression for people to go who are downsizing and upgrading at the same time. So with this, I just think it's quite pretty. This property, like I said, 5Ks from the CBD, $950,000. Rental estimate, $850 per week, which is a rental yield of about 4.65%. Why do I love it? Top location, low maintenance, above average rental yield. And you'll hear that I probably say that for the majority of the purchases that we do, because it is all about location. Majority of our clients who are not too hands-on don't want maintenance. And we want to make a rental yield that's above the average for not only the combined capitals, but for that specific capital city. And that's what we were able to get. The median house price in the suburb is actually $1,605,000. So to get a 3-bedroom townhouse at that price is great, considering a 3-bedroom house in that suburb. And remember, a 3-bedroom house is probably going to be on a smaller block too, at $1,150,000. So we got this at a great price. We're so happy with it. Last one I'm going to show you, and this truly is a beautiful home. And I think about it because we live on the east. I live in Sydney on the East Coast. We really do get kind of bent over here when it comes to pricing. We got this $10,000 under market valuation. My buyer's agent, Paul, got this for my client. It's on a 544 square meter block with 17 meters street frontage. It has been freshly painted on the inside. It is a 2007 build, so it's only 7 years old. The internals are modern, spacious. I mean, look, pendant lights, kitchen bench top with a waterfall, breakfast bench area. It's just a beautiful open area, nice house. You can actually see, and I love this for myself, it's got a genuine wood fire pizza oven that they built outside. Like, it's just the most beautiful place for entertainment. And you can see the outdoor area. There's the pizza oven area, nice outdoor area. Now, it has a pool. I've got to put a caveat out there. I don't love buying investment properties with pools, but this client just fell in love with it and said, this is just beautiful. I could see myself living there, even though they never are going to. It's got an outdoor shower. Like, it's just a gorgeous house. Beautiful outdoor area, in-ground pool, storage shed. It's just gorgeous. This is 38 kilometers from the CBD. That is not far, because the majority of people that live in Perth don't work in the CBD. They work in business parks around the suburbs that they live in. This is also about a 7-minute drive to the beach, okay? $645,000 purchase, $685 per week, which is a rental yield of 5.5%. Why do I love it? Again, strong growth location. There's much demand from varied sources for this type of product. Super tight vacancy rate. It's practically a new home, low maintenance, and this is a great buy and hold property. It's something you just hold on to. It's fantastic. Thank you so much for your time today, everybody. It's great to be back. This video was a little bit longer, but I tried to get 2 months worth of info and stuff into it. So thank you so much. Remember, we can't help you until you commit. And once you commit, we won't let you fail. We are bringing two things together here. Your desire to build wealth and our 18 years of experience of buying properties. So for more than 3 decades, Providence have helped Australians open a life of opportunity through real estate, giving them the future that they want. And we buy unique quality assets in areas where demand outpaces supply. And we focus on property that appeals to the much larger owner-occupier of 70%, not the 30% investors. And you can see that. It's evident in the examples I show you every single month. We buy in the right capital cities at the right time, guided by the economic property cycle. We buy the property which is uniquely suited to your situation, which will act as a springboard to your next wealth building stage. This is how top performers invest and build wealth. If you like what you've seen here, you want to be kept in the know with the Australian property market, make sure you like this video, hit that subscribe button so that you never miss out. If you'd like further education, you can download our ebook. The links are in the description below, as will be the YouTube link to the podcast that I did the other day. I want to thank you all for your time today, and I promise I will see you next month.